Many painting contractors buy the cheapest, off-the-shelf general liability policy they can find, simply to check a box and hand a certificate to a homeowner. That approach buys you a piece of paper, but it ignores the high-risk environmental factors unique to the painting trade. What looks like a minor accident on the estimate becomes a five-figure claim in reality. One spilled can of dark stain ruins a client's site-finished hardwood floor instantly. Outside, the risks compound. A sudden gust of wind catches atomized paint and drifts it across a neighboring parking lot. That overspray means you are paying to detail or repaint multiple vehicles. Then there are the physical risks to your crew, like a slipped ladder while working on a second-story soffit. And lurking beneath the surface is a toxic risk, disturbing lead paint during routine prep work on a home built before 1978. This checklist outlines the specific five-figure claims that frequently blindside underinsured painters: site spills, overspray, crew falls, and lead contamination. Assuming a standard bare-bones policy covers all of these scenarios is the fastest way to bankrupt a painting business. Let's look at exterior commercial spraying in unpredictable weather, like monsoon season in Phoenix, or the heavy marine layer in San Diego. A sudden shift in the wind causes the signature claim of the trade, a fine mist of overspray coating an entire row of parked cars. This matrix breaks down exactly how standard policies respond to drifting paint. They do it in one of three very different ways. Some policies contain an outright exclusion for it. Others argue the paint is a pollutant to deny the claim. A few sell coverage back to you through a specific overspray endorsement with a strict sublimit. If you do not explicitly know which of those three mechanisms is sitting in your contract right now, you are carrying the entire financial risk of that parking lot yourself. Extreme heat presents another problem. Summer stucco work in Henderson requires specific temperature windows. Apply an elastomeric coating on a 110-degree wall, it fails to cure, and the client demands a total redo. Standard policies contain a care, custody, or control exclusion. General liability does not cover damage to the actual surface you are being paid to paint. The carrier treats peeling callbacks as a workmanship dispute. You either pay out of pocket to fix the wall, or you carry professional liability to survive the loss. The problems escalate when you start scraping weathered exterior fascia on historic homes. Disturbing paint on a pre-1978 house falls under the EPA's RRP rule. This decision tree maps out the shockingly low thresholds required to trigger federal compliance. You only need to disturb 6 square feet of interior paint, or 20 square feet on an exterior. A typical exterior prep job blows past that 20 square foot mark in the first hour of scraping. Disturbing lead paint without a certified renovator on site exposes your business to federal civil penalties that accumulate daily. But there is a hidden insurance trap. Standard policies feature a pollution exclusion. Carriers routinely use it to deny lead contamination claims entirely, leaving you with zero defense coverage. Adding contractors' pollution liability is the absolute baseline requirement for surviving prep work on older housing stock. Let's shift to the commercial pro bidding contracts across state lines, where local rules rewrite your coverage needs. This map highlights how state licensing boards tie specific insurance limits directly to your legal ability to operate. In Utah, a general liability policy of $1 million per occurrence and $2 million aggregate is legally required just to hold the S270 classification. In Nevada, the C4 license carries a strict monetary limit. Try bidding a $900,000 HOA contract with a $250,000 license limit, and you trigger immediate regulatory action. Arizona's CR34 license makes workers' compensation mandatory the moment you hire a single employee. Compare that to California's C33 rule, which delays the universal workers' comp requirement for solo operators until 2028. The underwriter's application dictates your limits, particularly regarding height and stories on exterior jobs. If you take a 4-story repaint, but your application capped your eligible work at 3 stories, you hand the carrier a legal reason to fight the claim. Failing to map your application and your limits to your actual state laws renders your coverage legally useless exactly when you need it. A generic liability policy fails to cover the specific realities of the painting trade. If you run a solo interior-only operation, you might assume your low-risk profile requires zero insurance. But a minimal package, general liability plus a tools floater, protects against a catastrophic site finish spill and provides the certificate you need to actually win the bid. A multi-crew exterior operation relying on sprayers, ladders, and lifts faces a completely different risk profile. This optimal coverage matrix shows that exterior crews require a larger stack with higher premiums, specifically accounting for height eligibility and mandatory overspray endorsements. Then there is the high-volume historic and commercial pro. By layering contractors' pollution liability, a commercial umbrella policy, and professional liability, this operation unlocks access to strict HOA boards and pre-qualified general contractors. This complex insurance stack operates as a competitive advantage. It proves your compliance and wins you larger, more lucrative contracts. Your business protection must be mixed and applied as precisely as the paint you put on the wall.